A bit of a post-holiday disappointment over in the UK this morning. Marks Spencer, Britain's largest clothing retailer, missed analyst estimates, and the shares are down by as much as 5%. So now that Christmas has come and gone, you wonder, are there more disappointments ahead? We partner now with the Financial Times to bring you Lex on Bloomberg so you can get a sneak peek at the FT's flagship column a day early. Joining me live from London is Neil Buckley. Neil, let's talk about UK holiday sales in general. Marks & Spencer aside, how are they shaping up?
Well, it's a very complex picture, and it's very difficult to get into the heads of UK consumers at the moment. As you were saying, Marks & Spencer have had a slightly unspectacular Christmas, slightly disappointing, although their sales figures were the best that they've had for several quarters now. Indications from some other retailers have been that the holiday season was pretty robust, people shopping very strongly, particularly in the post-Christmas sales. But also this morning we've had some consumer confidence figures, a consumer confidence survey that fell in December by the most for a year. So people are clearly still very cautious about the strength of the recovery. And what retailers and forecasters are saying is this year they expect things to continue to be very tough for retailers.
Neil, let's talk a bit about that complicated picture because, as you just pointed out, consumer confidence in the UK in December disappointing. How is it then that holiday sales in some cases have been better than people might have expected?
Well, it's a bit of a paradox. If you still have a job in the UK, then actually your disposable income over the last year has gone up, even though we've been in recession. Mortgage rates have fallen sharply. That means that households have been several £100s a month better off. Utility bills for gas and electricity have also fallen. That's made people better off. And you've had a sales tax cut by the government from 17.5% to 15% for the last calendar year. Also, the unemployment rate has risen a lot less sharply than people had expected and a lot less sharply than in previous recessions. It seems that employers and employees have been a lot more flexible in agreeing things like pay freezes, flexible working, short-time working and so on, which has enabled employers to keep on more workers. So there's less fear of losing your job around than in previous recessions. That has helped keep retail sales better or more stronger than people might have feared over the past year up until now.
Now, Neil, though that said, a couple of moments ago you said things might change for 2010. The outlook might actually be gloomier than what we've just seen for this past holiday season. Why would that be the case?
Yes, people are very cautious going into this year, and the story actually in the UK is rather similar to in the US. What you had a few years ago in both countries was a consumption boom which was really fueled by a big increase in household debt. People were taking on a lot of credit. People were remortgaging their homes and using the money from that to fuel consumer spending. In the US, you've already seen the savings rate start to rise quite sharply. In the UK, that hasn't happened quite as quickly, perhaps for the reasons that I talked about just now, but we are seeing the savings rate increase, and it looks like over the next year we're going to see households start to pull in their horns, fix their household finances, their household budgets. We're also going to see headwinds probably in the shape of tax increases in the UK as the government tries to sort out the very difficult public finance situation over here. Interest rates could start to rise. So I think there are a lot of headwinds which will make it very difficult this year for consumer spending in general.
Neil, thank you very much. Neil Buckley from the Lex desk over at the FT in London.